Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video, we're going to be looking at my growth portfolio that I have with M1 Finance and just looking how it's been performing over the past month. This is a portfolio I've been working on building up pretty much since the beginning of 2021. I don't really have as much experience with growth stocks, so it's something I definitely want to learn more about, and I'm trying to learn more about. So let's get right into it. So this is just my portfolio here with M1 Finance, currently only valued at $474, but I'm adding money pretty slowly to this account. But this is M1 Finance. If you guys aren't familiar with it, basically what you can do is you can set up these pies like so, and you allocate a specific percentage of your portfolio to each stock that you want to invest in. And then whenever you deposit money to your account, M1 Finance will just automatically buy those stocks in your pie in the correct proportions to keep these holdings at this approximately or close to the target weighting of your portfolio. So the thing I like about it is it's very passive, and pretty much for the most part, the only time I check this portfolio is when I make these videos every month. I might log on once or twice throughout the month just to see what's happening. But normally there's not much I have to do because I have automatic deposits set up, and I have once that money is deposited, then it just automatically invests. So if you want to be real active, it's definitely not very good for that. You want to be buying and selling all the time, but for this kind of passive investing that just dollar cost averaging over time, essentially, I have made some individual buys in some cases, but for the most part I just dollar cost average on a weekly basis, and I really love it for that sort of use case. So if you guys do want to sign up, they have this great referral program. It was $50, but now it's $30. So basically I have a link in all my video descriptions, and if you click on that link and sign up to M1 Finance and deposit, I think it's $100 for a regular brokerage account, and then if you open up a Roth IRA, you have to deposit $500, but we'll each get $30 for that, and that's just a little extra bonus for you from M1 Finance. So really a nice incentive, and helps me out definitely, and it helps you out as well. So if you are interested, definitely check that out. But now we can look at my portfolio here. My biggest holding is definitely VGT, which is Vanguard's Information Technology ETF, and this one is right around 17% of my portfolio, and up a solid amount, around 20% by M1 Finance's calculation. They do have a different calculation for percentage return than I think most people would look at. So it's sort of based on when you're depositing your money over time, which is a little bit more complicated, and technically it's more accurate, but it's more difficult to compare to the index per se, because the return of the index of the S&P 500 is just like if you invested $1,000 at this time and just held it for a year, you would have some sort of return. But with this, since I'm adding money over time, that compounding is having an effect and making that return a little bit different, and it's a little bit harder to think about. So I think this return is actually more accurate, so to speak, but it's more hard to compare it to something else, I guess. So that's why I don't really like this kind of return as much. But M1 Finance is saying my return with this VGT is 20%, which is awesome. The next one here is ARK-K, and this is an ARK Invest ETF. It's about 10.5% of the portfolio right now, and I'm not as much a fan of this one as I was before. I was really not in the Cathie Wood hype, but I was in there a little bit, and have since gotten out of that a little bit, and but I still like some of the companies that they do hold, for sure, and I don't think it's a bad ETF overall. I just don't want as much exposure to it as I did in the past, but they were pretty hyped up at the beginning of the year, so that's why they are down now, because I think they're at a little bit more realistic levels. So that one's down about 11% for me. Google, about 9% of the portfolio, that is up 50%. Amazon, about 9% of the portfolio, up about 8%. PayPal, about 9% of the portfolio, up 13%. Shopify, 8.5% of the portfolio, up around 20%. Tesla is about 7% of the portfolio, up about 12%, which is a surprise to me. I thought thought we were still down on Tesla, but that's good to see. Over the short term, I'm not really worried about it, but really focused on the long term for this one. MasterCard, 5% of the portfolio, just about breaking even, up a tiny bit. And then Visa up about 8%, which is 5% of the portfolio as well. Spotify down here, 5% of the portfolio, down about 15% on that one. Spotify, definitely a good company, but has been, overvalued, or likely overvalued, I would say. I haven't done a super in-depth calculation of fair value, but I would say they've probably been overvalued over the past year or two. But I still do want to own the company, so I'm okay, buying a little bit over time. And as the stock price drops, I'm getting a better average cost. So Square as well, about 5% of that portfolio, and that one is up about 17.4%. And then Jumia here, about 4.7% of the portfolio, is down, about 50% based on their calculation. But if we look at it here, my average cost is around $28.20, and the current price is around $19.83. So based on that, average cost versus current price, I'm down about 30%. And then, based on their calculations of the money I've added over time, they say it's like 50%. So I guess it's just a different way of calculating returns, which is fine. And then Adobe here, about up around 25%, 27%, and that one's 4.7% of the portfolio as well. So overall, I'm pretty happy with how it's going. I mean, obviously it says I'm only up around 5.8%, but some of this money I have not deposited, this whole $460, because some of those have been from referrals. I think I've gotten probably close to over $100 in referrals. So that has definitely helped, and I definitely thank you guys for signing up with my link. That's definitely super helpful for me, because it just gives me a little bit more capital to add to the portfolio. So it says I'm up about 5.8%. That's based on the stocks returning in my portfolio, which is definitely lower than the overall market, but I'm perfectly fine with that at this point. I'm definitely newer to the growth stock space, I guess, and still have stuff to learn, I guess, about how to pick these stocks, and how to maybe this strategy of dollar cost averaging like this isn't the best strategy with these kind of stocks. We'll just have to see. It's still something I'm definitely learning about, and I'm trying to do better with. So if you guys do have any suggestions with that, I would love to hear it. And I would also like to hear about any stocks that you think are sort of growth stocks that might be a little bit undervalued, or at least like fairly valued right now, because I think that's not the case with a lot of these companies. So I'd love to hear what you guys are doing with your growth stocks, or if you do own any growth stocks. And thanks for watching to the end of the video, and I'll see you in the next one.